A beautiful day to you. This is Ron Janish with AndrewsCourse.com, or what is actually formerly AndrewsCourse.com, because you see, if you now go to the AndrewsCourse.com website, I am no longer the one behind it. For quite some time, I've been telling everybody, hey, look, I'm going to stop this stuff, teaching it, that is, and lo and behold, I have. Now, if somebody comes to me and is really sincere about wanting the course and material which I have around, and perhaps the original works of Alan Andrews, and the price is right, I can go ahead and do that. What I think would be valuable is getting some additional insights to make things real quick and easy. Anyway, let me just show you this chart here and what happened here. This is something I bought right down here, and it went up here today, and you'll see that I liquidated my rather substantial position in this. What this does is it makes money, or goes up, as interest rates go up. So why did I buy this stuff? Well, yeah, there was a technical reason, using Andrews probably, but in addition to that, there was the philosophy that when you invest, you're looking to put money into things that you know will happen in the future. Okay, interest rates going up back in March, that was pretty obvious. And here they are today, so quite a bit higher. Well, will they go higher from here? Possibly. But I took profits nevertheless and put my money elsewhere, as you'll see in a moment where I put my money to work. As you can see here, this is the good old pitchfork, low, high, up, low, high, low, and there's the pitchfork. Let's see if we can find out the here we go. Let's take a look at, there we go. Okay, so as you can see, I wind up selling TBF today and TBT, which is kind of like TBF on steroids, okay, and took a substantial profit. Okay, and as you can see, these are my positions right now in this particular account, and I think it would be worth your while to look up what these things are that I have in the account and to see if they might be appropriate for you. Okay? And do I have other positions? Yes, I do. And we'll take a look at those in a moment. We'll see if I can find some of those. Let's take a look. Okay, here's another account. I started this one around over here, about $84,000 back in August. It's now at 107. I can tell you that we had a little bit of TBT in there, you know, that interest rate thing, but we also had some other positions which had to do with the stock market going down. So I am now out of those positions, and I now have one of the things I have in here that I was able to buy in this account at TD Ameritrade that I wasn't able to buy at Merrill, the other account, is GDMN. And what that is essentially a long position in gold. Okay, there's much more to it. You have to do a whole bunch of research, and some brokerage firms won't even let you buy it. So, because it's only got like 6 or 10 million out there, it's not a huge ETF. Okay, it might be in the future. We'll see. Okay, so there's that. Now, what else do I want to tell you guys? Okay, so, okay, now those of you that took the course and have the original works of Andrews, look through the material. I remember Andrews talking about certain indicators, and I know I focused on those, that are extremely reliable. And give you a hint, one of them wasn't the median line. Okay, even though the median line can be very useful. So there are certain indicators that are incredibly reliable, very useful at finding reversal points. What that means is you can often get in without a heck of a lot of risk, which is really the name of the game. Okay, so I can tell you that, for example, in the stock market, we bought on this day, we got out of our short position here. Let me get rid of all this crap. We got rid of our short position there, and on this day here, and wound up putting on long positions the next day, and away we go. Okay, so the theory is that there's a good chance that the stock market will go up from here. How far will it go? Don't really know. But I'd like to see it go above this 50% point and stay above there. Okay. So that's something I'd like to see. Another thing is that you may have noticed that one of the positions I have in my account is JEPI. Now, JEPI is a rather interesting stock. It's an ETF run by JP Morgan. So, they're fairly smart fellas. And this is a stock, an ETF, that winds up generating income every month by the use of options. Now, my opinion is that if you want to learn about options and don't really want to risk a lot of money, and you think the S&P is going up for probably the next 9 months, then this might not be a bad alternative. If you look at their track record in terms of, take a look at real simple stuff, the high for the year, and what percentage they went down to here. And you do the same thing for the S&P, and you get a number. Okay, but what you got to add is this guy here, you got to add about 10% to whatever number you get. Okay, you got to, wrong. So let's say you get 20%. What you do is you subtract 10% because these guys have been paying a dividend equal to over 10%. Okay, so you got to do the math on this, and the reason I did that math is because it's nice to see in a down move how stocks perform, because if you're going to go long these things, you want to know how they do when things are not so good. So that's something worth seeing. Okay, take a look at that. And okay, so right now I personally like the stock market. I believe it or not, I like Bitcoin, which I'm not invested in. I like gold, even gold, crazy as that seems. I wound up buying gold stocks today, and so it's away we go time. Now here's a little secret about the Andrews technique, and actually it's kind of a problem. So here we drew okay, so here, let me take this one more time. Let's try and see what happens on monthly. Still doesn't like it. Okay, let's try this again. As you can see, this did what some would call a nice, pretty ABC. Okay, and if we look for this down move here to be about the same as this guy here, this is what we've had. Okay, so that's kind of interesting. Not that I use that in order to determine what I'm doing, but that's kind of cute. The other thing that's kind of cute is you draw a line from here to here, or there, it doesn't matter. Let's get rid of these other lines. Look at that. Multiple pivots. Those are cute. Okay. Those of you that are course members know the indicator that I used in order to buy this. And it's not anything I'm showing here. Why? Because I sent you an email that says, hey, I bought this sucker and this is why. Okay, so anyway, that's what I've got for you. If somebody has the overwhelming urge that they would like to teach the Andrews course and utilize my videos, the material I have, all that kind of stuff, maybe even have an exclusive right to them, let me know. ronjanish@gmail.com. Okay. I'm here. Anyway, that's and okay, the other thing, let's take a look at the S&P just for fun. I happen to own a bunch of these guys. That's the S&P on steroids. Let's see, so why would somebody want to be long the S&P? Well, as you know, I had a signal last week, and besides that, and those of you that are fully paid course members know exactly why. It's not that hard. Okay, let's take a look at this. So what would make sense to me is that the stock market come on. What would make sense to me is that the stock market goes up from here. Okay, and let me draw the right median lines the right way here. Apparently it screws up when I draw them sometimes. As you can see, price went down to the ML, bounced off it once, bounced off it a second time, and now we gotta go up from here. So the idea is that if it goes up and goes up strong, it would not surprise me to see it try to hit this line up here. Okay, that would be fairly healthy. So, and those of you that are all kinds of worried about the war in Ukraine and stuff, what I can tell you is that from what I see is Putin's not stupid. Even though I've got the potassium iodine pills here just in case he does something stupid with nuclear energy and nukes, he's got the butcher in charge, and the butcher is very clever. The butcher is going to really look at destroying infrastructure and make it so that the Ukrainians don't want to live there. The trick is that when he does this infrastructure thing, that he doesn't wreck it for Crimea, okay, or that he develops some kind of alternative for resource for Crimea so that they still get their water and anything else they need. But as near as I can tell, This guy is clever, and he's going to say, hey, we don't need to bomb schools. We'll just bomb infrastructure, meaning electricity and water. If these people are without electricity and water supplies, their lives turn into hell. And that's what he's going to do. He doesn't really need to use chemical weapons. So, anyway, so much for that. Hey, I want to thank everybody who's taken the Andrews course. It's really helped me out a lot. And I'm glad you have the materials you do. And if you have any questions, I'm around. Give me a buzz. See ya. Bye.